Introduce our experts for today. We have Kunal Bothra as well as Avinash Gorakshakar joining us. Good morning, Kunal, once again, and good morning to you, Avinash. Thank you so much for joining us on ET Now. And let's get going with the queries right away. And the first one that I have is from Vivek. And Vivek is saying that he's holding Canara Bank at an average price of 209 rupees per share. He wants to know whether he can hold it for at least 10% profit booking, is what he's asking. Kunal, you're smiling. You know this question is coming your way. A tricky one. What's your take on Canara Bank?
So I think it depends on the time frame. Now, if you are ready to hold the stock for at least another 3 to 6 months, then possibly yes, you have a substantial chance and a very strong chance of making not just 10%, but I think buying the stock at a classical trending or an inflection point for itself. Canara Bank and Bank of Baroda, these are stocks which have changed behaviors for themselves over the last 3 to 4 years. I remember tracking these stocks, in 2017-18 as well, and they were absolutely very volatile kind of a stock. That's not the case so far in the last, 1.5 to 2 years of this change of behavior for stocks like Canara Bank. They are not as high beta. They are not very volatile. That's a sign of, maturity and stability which has come back into these prices. I would probably expect that if you have a time frame of 3 to 6 months, you should definitely look to hold Canara Bank, and if possible, look to probably add even stocks like Bank of Baroda and SBI to your list.
We've got the next question coming in from Suresh, and he's writing in from Chennai. Avinash, this one's for you. Tata Investment Corporation is the name of the counter, and he's already holding at levels of 1458, which is not too far away from the current market price. He's asking whether he can hold for a horizon of about 1 to 2 years and whether he should accumulate more at the current market price.
Good morning, Alex. Alex, I think, Tata Investment Corporation is the holding company for the Tata Group companies. And basically, this is not a manufacturing company or a financial service company. It's a holding company where it controls the stake of all the Tata-owned companies. So the main revenue and profit for this company basically gets generated from the dividends announced by the Tata companies. Now, he can definitely hold on for the next couple of years because prospects for most of the Tata companies look quite promising because, they've got holdings from TCS, Tata Elxsi, almost all the Tata companies are housed in this company. So I think if the investor wants steady returns, then I think he should hold on because typically holding companies, trade at a discount of roughly about 20 to 25% of the fair value of the investments which are, there on their books. So I think my guess is that over the next couple of years, most of these Tata companies across automobiles, IT, these sectors would definitely do well. So if he wants a steady kind of return upside, he should definitely hold on. My sense is that over the next 2 years, if he can hold on, he could expect a reasonably good risk reward because finally, this being a holding company, the value would proportionately increase with the value in the stock prices which they hold in their portfolio.
All right. This next query that I have is from Amy, and she's saying that she sold Marico June expiry futures at around 540 as it's facing continuous resistance at around 540, 550 zone is what she's saying. She's also saying and she's also observed a bearish flag on its monthly chart, which she thinks is broken now. So she wants to know whether she can hold it for 470 to 480 levels. Marico June expiry futures is what she's asking about, Kunal.
You've made a lot of money, shorting the stock at the right time of 545. 45 odd because this is the monthly resistance for Marico, and I think over the last 2 to 3 months the stock has been taking resistance at this point. But then the contra point to this is that the stock is also taking a lot of support at this 490 to 478 I think kind of a support band. We are almost at that 490 492 mark. I think yesterday we managed to break that 490 levels to I think 485 was the low which was made on futures for Marico yesterday. So I believe that these are points where you can look to square off because the risk reward may not be in favor for you to try and wait out for at least another 10-15 rupees on the downside. Because the stock has come back to its support territory, it makes a lot of sense to book out profits.
Garware Technical Fibers is the name of the counter. Kunal, I'm coming to you on this next one. We've got a question coming in from Vivek, and he's asking about what entry price would be appropriate or whether the current price is appropriate for the next 1 to 2 years.
So, first of all, I think it's a very illiquid kind of a name. I think the daily volume, average volume for the stock is almost at, I think, 10,000 or just about those kind of shares on the NSE. So again, not advisable to have such kind of stocks on your longer term portfolio. Purely in terms of price points, I think if I have to look at the support zone for Garware Technical Fibers, then I think the support is at 2780, which is a previous month low for the stock. And also I think prior to that, the month of March and April as well, the stock had bounced off from those 2700 levels. So 2700, 2780 could be a good support point. That's where you can look to enter.
Okay, this one is for you, Avinash, and this one is coming in from Natarajan Ramesh. He wants to buy in the gas distribution space. He wants to know which of these companies will be more profitable over the next 2 years. Will it be IGL, MGL or Gujarat Gas? I'm not sure when he's talking about profitable, does he mean in return-wise or earnings-wise? But nevertheless, Avinash, which is your pick in the gas distribution companies?
I think I would believe that Mahanagar Gas MGL looks pretty attractive. I think the stock has corrected sharply, and I think this is attributable to all the city gas distribution companies. If you look at Gujarat Gas or IGL, I think the key problem for these companies is that natural gas prices globally have shot up post the Russia-Ukraine war. And I think at least for the next 1 or 2 quarters, raw material prices are going up. But the good part is that all these companies have got good pricing power. They have raised prices to cover up their costs. So I would say that if the investor has a 2-year view, then I think MGL definitely looks attractive. I think very attractive valuations of just about 10, 11 times 1-year forward numbers, and obviously a very strong balance sheet, virtually debt-free, having cash of about 3,000 crores. So I think he can expect good returns provided he has got a long-term view of at least 2 years.
I'm coming back to you on this next one, Avinash, and this is on LIC. We've got a question coming from Hariharan. He's writing in from Trivandrum. And he's asking whether it is likely that this counter will lose ground further. I don't know if that's an easy question to answer, Avinash, but would you say that this is a good level to start entering the stock with a horizon of at least 18 to 24 months?
I think, Alex, insurance is a long-term business, and I think unfortunately, retail investors who applied for this issue have been very majorly disappointed. The dividend has also been very meager. In fact, a lot of expectations were there that the dividend could be very attractive, but unfortunately, that was also not the case. One negative in the near short term would be that a lot of anchor investors who had invested in this company, the lock-in period is going to end in the next, say, 1 or 2 weeks. So I think that could possibly also release a lot of short-term pressure if these investors decide to book out. Frankly, I don't think they would book out at a loss, but if it all happens, then the stock would see a further correction. But I think currently, if somebody has a 2-year view, then I think definitely, LIC is one of the largest players, makes money on every policy. And you can't compare them with, the new generation companies which actually burn a lot of cash. So I think if you keep a 2-year view, I think hopefully the policy business is very strongly growing. They have a large market share, and I think aggression would come in. I think the markets would await more clarity in terms of analyst meet calls, commentary from the management, which I think at the moment is not there at all. So, that's the reason the stock has underperformed. So, I mean, next 2 years, I think I would not be, hesitant to say it could be 950,000 odd rupees, provided one is willing to take a contra call and, given a reasonable time frame, for this kind of investment.
All right, moving on, let me take this one from Naveen, and he wants to know whether he can buy KPIT for the long term. Avinash, this one also is for you.
Yeah, I think KPIT, frankly, is a electric vehicle kind of a classic story which is panning out. They are largely present in the global automotive markets, and electric vehicle is going to be a very strong vertical for them. The stock has corrected significantly from its top, and I would not be surprised that going forward FY23 could be a lot better compared to FY22. My sense is that this business is going to be extremely promising from a 2-year view. So if the investor can take a long-term call, I think even at the current odd levels in these kind of markets, if he can accumulate this stock slowly, he should be able to generate a decent alpha and a good return over the next, say, 12 to 18 months. So definitely worthwhile buying now, but time frame should be at least 12 to 18 months.
He's asking a question. He's writing in from Chennai. He's asking about Zee Entertainment, which he's holding, Kunal, at levels of 259. It's a substantial holding. 2,000 shares is the holding. And he's looking at the next 3 months or so. What should he bear in mind? What level should he watch for?
See, I think as of now, you can look to hold on to your investments over here. Now, I understand that Zee has underperformed. The media sector has underperformed significantly. in the last 3 to 6 months. But then the charts for Zen, when I look at it purely on the basis of technicals, there are a lot of bullish things which are happening for the stock price. MACD is giving a breakout on the upside. It's a positive crossover on the daily time frame. Even though the stock has corrected, when typically indicator starts to rally or a breakout mode, the stocks get back into a bounce kind of a zone for themselves. So even if there is a minor bounce for Z from current levels, we could be looking at the stock hitting back towards 259, 260, which could come back to your cost price. So I would suggest a hold as of now.
It's from Siddharth, and Siddharth is asking, do our experts have any view on Hindalco? Kunal, Hindalco, how does this one look on the chart? If someone wants to invest in this particular counter, does it make sense given what is happening with the metal space on the whole?
So I would avoid, suggesting or asking you to buy the stock at current levels. We've been discussing Hindalco extensively over the last 1 month. There was a phase where the stock had come back into very deep kind of oversold nature of indicators. It had bounced off from those levels to almost 440 from 380 levels, but now the stock is back to that 380, 385 support zone. So this consistent testing of the support makes the levels quite weak, and possibility that the stock may break on the downside rather than on the upside. On the upside, if you're looking to buy the stock, I would suggest that wait out for the stock to break past about 440. It's absolutely fine that you would probably buy the stock at 10% higher levels, because then there would be a confirmation that the trend has reversed on the upside for Hindalco. But till the time it doesn't break that 440 mark, there is a very high probability that the stock may continue to drift lower. I would suggest an avoid at current levels.
The next question is coming from Yvonne. Yvonne's asking about Bombay Stock Exchange, and this one's for you, Kunal. Bought at levels of 747, and she's asking whether to hold for a longer period or sell at this juncture.
I think it's a quality stock. I think even on the short-term time frame charts, it's forming an inverted head and shoulder pattern. And I think the neckline of this pattern is at 774, 775 on the spot level. So I would suggest to wait out for at least another week or so. If the stock breaks past about that 775 mark, is where I believe that a very sharp momentum can occur into the stock price, which can probably lead to the stock even coming back towards 850, 875 levels as well. I would suggest a hold.
All right, this one is from Nikhil Bhatt, and Nikhil wants to know that right now which sugar stock is attractive in terms of price he wants to buy for the short term. Kunal?
So I think from the sugar pack, there are two stocks which are looking attractive to me on the charts. One, of course, is what we keep discussing regularly, Balrampur Chini. That's something which is looking attractive even at those 390, 400 levels where the stock is currently trading. And the second one, when I was looking at the charts on the very short-term time scale, is EID Parry. I think that stock is at 544, 545 approximately. On the short-term charts, it's forming a bullish flag formation. And I think the breakout is at 550 for EID Parry. So that's the other stock which you can look at purely from a trading play.
I'm coming to you, Avinash, on this next one. We've got a question from Gopal Vyas. He's writing in from Bikaner. And he's asking about Kohinoor Foods, not a question that we get every day, but interesting nonetheless. He's bought at levels of 50 and he's asking whether to hold for 1 year. What's the view?
Alex, you can continue to hold on. See, Kohinoor Foods is a very well-known brand in the basmati rice market, and I think current trends actually predict that the basmati rice market is going to do extremely well in the current year. Overall, I think the Middle East is a very large opportunity, and I think with the rupee weakening, obviously exports are going to realize a better kind of margin for the domestic players. So I would suggest that if you can hold on for at least the next 12-15 months, possibly a price of around 70 to 75 rupees is not completely ruled out. I think he should hold on. My sense is it appears to be a good opportunity, but I think one needs to take into mind that it's a mid-cap counter, so there could be a lot of volatility in the stock. So please keep that in mind and keep a positional view of at least 12 to 15.
Okay, this one is coming from Sukanya Karant. Sorry, sorry for that mispronunciation. She wants to know about Gujarat Ambuja Export. She wants to know whether she can enter right now for medium to long term, and does it make sense to invest in this company? What's your take on this one, Avinash? Gujarat Ambuja Export, do you track this one?
Yeah, I think, see, Gujarat Ambuja Exports is one of the largest corn producers in the country. In fact, they make value-added starch derivative products, which find applications in pharmaceuticals, into fast-moving consumer goods, snack foods. So I think the applications are endless. We saw that the company produced a tepid quarter in fourth quarter, and that was largely because of the fact that volume growth in this quarter was not as per the expectations of the market. The management commentary has been quite positive. In fact, the expectation is that corn prices have shot up, ever since the Russia-Ukraine war took off, and I think realizations are now, in fact, better. Hopefully, the company should do well in FY23. So the investor, if he, has a 12 to 15 month horizon, can definitely look at buying the stock in a correction, because clearly from a value accretion perspective, the company has a very solid balance sheet, and there are many large, PMSs and funds which have now taken positions here. So I think longer term prospects appear to be quite good.
Avinash and Kunal, do stay with us. We have to slip into a very quick break on this program, but on the other side, we are taking more queries. Viewers that have written in, do stay with us. We'll be back very quickly.
Problem on coming on your channel is that you already know everything. I just heard your introduction, and what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong. We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
But if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
See, Nikunj, you're a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn. All right, welcome back. You're watching Buy Now, Sell Now on ET Now, and we're in the midst of the query segment. This next question that I'm going to take is from Anjali. She's writing in from Nashik. And this is for you, Avinash. And by the way, in case you're tuning in right now, Avinash Gorakshakar as well as Kunal Bothra are answering your questions today. PNB Housing Finance, is this a good stock to hold, to buy? Would you recommend a fresh buy at this juncture?
Alex, PNB Housing Finance has been one of the larger housing finance companies. In fact, it's the fourth largest housing finance company in India. There is a PE investor, Carlyle, who still holds a decent equity stake, and there have been some news flow that sooner or later, some strategic investor is going to come in here. Most importantly, yesterday there was a news flow that the company is going to raise funds, in the market, and that has obviously, been discussed in the markets, considering what kind of premium they'll raise. But coming to the housing finance market, I think the good news is that interest rates have started rising. Disbursements have started increasing. So I would believe, at the current levels, the stock is corrected significantly from its higher lows. And I would believe that somebody who's got a medium to long-term time frame of at least 12 to 18 months could definitely look at this company, because in terms of the book size, in terms of the disbursements, it's a large player. The only caveat is that the asset quality is a little elevated. So I think if one can hold for the next 12 to 18 months, one can expect a decent risk reward.
All right, let me move to Kunal. Kunal, Mr. Bhandari wants a technical view on Axis Bank. How does Axis Bank look to you? No doubt, with the repo rate hike cycle coming in, it is positive for the banks in the larger scheme of arrangement. But right now, if you look at banks, they're down and out. So how is the chart for Axis Bank looking like?
So, relative to the other private sector banks, even Axis Bank is the one which has been trading below its long-term averages. So chart structures are nothing, very, very exciting for the stock price. It's just that, the stock has been holding above its major support lows. I think 650 is a major support for Axis Bank, which we tested, I think, in the month of May 2022. And from there, the stock has seen a bounce, even though it's very marginal, of course. But, nothing exciting about the charts for, us to try and initiate a contra on Axis Bank, unless the stock breaks past about the previous highs. 720 is the previous major high for Axis Bank. So it has to cross those levels for the stock to start getting into a strong uptrend. And until that, I think it could be a stock which can just about consolidate.
Okay, I'm coming back to you, Kunal, on this next one. I do not know if you're going to have a view on this. Indigo Paints is the name of the counter. If you have enough data, would you be able to give a view to Anant Krishnan, who's writing in from Madurai? He's bought at levels of 1675. What should he do? He's got a short-term view.
Well, I would suggest to exit the stock. The chart structures, even though it's very limited history for the stock price, but it's indicative that the stock is getting into a fierce downtrend for itself. It's not even tested its 200-day moving average since the last 4 or 5 months. That itself tells you, the intensity of selling the stock has seen. I would suggest a sell.
Okay, Sagar wants a fundamental view on Muthoot Finance, and it's a bit of a longish query. So let me read as he's written. He's saying that earlier it was a monopoly business as banks avoided gold loans, but banks are now doing it as well. And he also wants to know, don't you think that the market share of Muthoot will decrease going ahead? Also, South banks have become more prominent in giving these gold loans compared to Muthoot Finance, because banks are considered to be much safer than NBFCs when it comes to gold loans. Do you concur with all of these views, Avinash, on Muthoot Finance?
Yeah, I think the current headwinds in the gold finance market are definitely very challenging. In fact, what you mentioned is right, that not only the public sector banks, but some of the other private sector banks have entered this market, and the management has also commented here saying that the disbursements in the gold finance business for them would obviously moderate. But you must remember one thing, that unlike the banks or the other NBFCs, they don't have the issue of asset quality at all, because they hold the gold of the customer, and that hardly depreciates. So the business is very safe. And my sense is around 1400 odd levels, the stock has corrected sharply. So in fact, despite competition coming in, my sense is the opportunity size for the gold finance market in India is pretty large, and there is a space for every player to operate. So obviously, in the near term, there could be margin pressure for Muthoot Finance. But if you're looking at the next 1 to 2 years, I think this is a great opportunity to build on this gold financing franchise, because I think in terms of the reach and in terms of the size, Muthoot still continues to be the market leader. So I think you can hold on if you've got a 2-year view. But I think in the short term, definitely there would be some pressures on the stock price, because headwinds here are completely, very challenging here.
Let's pull up NMDC. We've got KVG Reddy, who's writing in from Hyderabad, and he's holding at levels of 167. This one's for you, Kunal. Should he hold on or should he add at this juncture?
I think we're at a point where many of these commodity-driven stocks, metal-driven names, are the ones which have been beaten down. There's a lot of negative news flow. In fact, NMDC over the last 3 months has corrected very sharply. Prior to that, it was a stock which was getting into a bounce kind of a mode from 125, just about, I think, end of last year. The stock had rallied up quite smartly, but then now I think it's losing a lot of ground for itself. So I would probably believe that wait out for this tough period for many of these commodity-driven names, because whenever the bounce or the rally shapes up, it could be very, very strong and ferocious for such kind of stocks. So I would suggest a hold, at least as of now.
So Naresh is saying that he has Bajaj Finance 20 shares purchased at 6100 rupees per share, Maruti Suzuki 10 shares purchased at 7898 rupees per share. He wants to know whether he can hold both of these for the long term, or does it make sense to exit both of these counters. What's your take on this one, Avinash? Maruti and Bajaj Finance, do you think that it even makes sense to exit these counters right now if you're looking for the longer term?
No, I think, my sense is both these companies need to be held on for the next at least 1 to 2 years, because I think tailwinds now in the automotive component space have become quite attractive. In fact, Maruti Suzuki has announced a 10,000 crore investment in the electric vehicle business, which should see vehicles coming out post 2023. And most importantly, after a long time, demand for automotive vehicles has shot up. Hopefully, steel prices have also come off. So obviously, the raw material cost pressures will ease out. So I think if you have a 2-year view, Maruti Suzuki should definitely benefit, not only in terms of their reach and geographical, customer acquisition strategy, but I think the new model lineup would also be interesting. The second company, can you please repeat the name, please?
It is Bajaj Finance.
Yeah, I think as far as Bajaj Finance is concerned, I think, it is one of the largest NBFCs in the country, and which enjoys a very strong ROE of almost 18-19%. The good part is that now they have, digitized most of their operations, and in the next 1 or 2 months, you could see a lot of activities coming out from their digital app, which they have developed in-house. So my sense is, with interest rates moving up, it's definitely going to be beneficial for them, because they have a housing finance business, a consumer durable financing business, and clearly they have, a large amount of liquidity already parked in their balance sheet. So they don't have a problem of funding these kind of increased disbursements. So I think keep the patience, and I think over the next 1 to 2 years, you could see a lot of margin expansion and business expansion for this company. I think in the near term, such businesses are going to be very, high volatile kind of businesses. But in the longer term, I think definitely value could be better.
ONGC is the next counter that we're going to discuss. Of course, fundamentals have favored this company because of the price of crude oil that has been elevated for the past several months. But this is a short-term question, and this is from Jinto. He's asking this to you, Kunal. He's bought at levels of 165.05, and he's asking what the prospects are on the charts for the near term.
See, I think as of now, this has been one of the better months for ONGC after 4 months where actually crude oil prices, remained elevated. This is the first month where you're actually seeing ONGC do pretty well for itself. So price-wise, I think this could be a month where the stock may see a turnaround. But the only catch with a stock like ONGC, and I'm talking of it over the last so many years of tracking the stock, is the lack of follow-through price action. So we can expect that if crude oil prices continue to remain at a sustained high levels of $125 per barrel on the Brent crude, then possibly ONGC can see a move on the upside. But then, there are a lot of, pros and cons towards this kind of a, move on ONGC. If the stock sees a follow through on the upsides in next month, then we can expect that the stock can continue to do pretty well. But then, I would probably expect that it's better to have a trading stop loss, which with such kind of a theme for stocks like ONGC. I would suggest keep maybe 158 as a stop loss, for this trade, and on the upside, you can look out for maybe a 180 as a probable target for ONGC.
Okay, this one is from Kaji and this one is for you, Kunal, and it's another tricky question. He wants your opinion on the Nifty bottom. He is, however, saying that I know that no one can predict it, but I would love to know what's Kunal Ji's view. So what's your view on Nifty bottom?
See, I think I'm not sure whether he's looking at intraday bottoms or the medium to long-term bottom. From a longer-term play, I would probably expect that the correction is not over as such. We've been discussing a lot of those pointers on the indices as well on a regular basis on different shows on the channel, and my sense is that we are getting into a phase. We are already into a phase of a bounce on the indices. Now, when the markets would crack down, what reasons the market would crack down again could be difficult to anticipate. But then this sectoral pressure and the push which you're seeing on the indices is not helping the cause for the index to sustain this bounce. Eventually, I think the 15,700, 750 mark should be breached, on the indices. Whether it happens in this month, next month, or the month after that, that's the one which is going to be a bit tricky for the index. And once we sell off or we break that level on the downside, my sense is that we should correct at least another 700 to 1,000 points further on the index. So 15,700 remains to be a crucial, as of now, support territory. If we break below that, then you can expect at least another 700 to 1,000 point correction on the index.
All right, gentlemen, it's time to start the rapid fire segment, and you know what this means. We're going to throw as many questions as possible over the course of the next 2 minutes. Bibek Roy Chaudhary, who's writing in from Kolkata, is asking the first question. This is Zensar Technologies. Avinash, this one's for you. 5-year view, average price is 340 of his acquisition. Should he hold on?
Yeah, I think he should hold on. I believe the tailwinds definitely look to be positive, Alex, and I think he should expect decent returns over the next 12 to 18 months.
Okay, this one's from KR Balan. He's saying that he's bought Birlasoft at around 400 plus levels. He wants to know whether he should hold or switch to Bajaj Finance and Infosys instead. What's your take on this one, Kunal?
I would suggest to hold as of now for Birlasoft. The stock can get to a...
Okay, Metropolis, Rajan wants to know what the view is, Avinash, on the fundamentals. Should he buy?
No, I think one should avoid the stock at the current point. I think numbers definitely are going to be extremely bad and competitive in the coming quarter.
Okay, this one's from Mr. Raja Rampur, and he's saying that he has 30 shares of Butterfly Gandhimati, which he's purchased at 510 rupees per share. He recently got to know about the news flow regarding it, about CG Consumer looking to acquire it. Wants to know whether he should continue to stay put with this holding or no. Kunal, what's your take?
I would suggest an exit.
Kunal, Infosys, we've got Viral Kumar who wants to buy 100 shares. Is this the right price to buy?
I think yes. If you're looking at it from a short-term play, possibly a target of 1540. Stop loss for this trade, 1465.
Okay, Tripta Ahluwalia has bought Intellect Design at the price of 875 rupees per share. Wants to know whether she should average. What's your take, Kunal?
You can repeat the name of the stock?
It is Intellect Design.
I think I would suggest to hold on to the existing holdings which you have, and possibly if you're looking to add, keep it at 600 level.
Birlasoft, Avinash, I'm going to come to you on this one. Short-term view is being sought. Jeevan Reddy wants to know whether to hold. His average price is 396. Should he apply for the buyback?
Yeah, I think he should apply for the buyback, Alex, because I would believe that the buyback price is pretty attractive. So he should apply in the buyback.
All right, and with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Kunal, as well as Avinash, for joining us on the show and resolving all of our viewer queries. And viewers, yes, we've come to the end of the week and we've come to the end of the query segment, but don't be disheartened. We'll be back next week. So do write into us, do tune in at 11 a.m. and share with us all of your queries, and we'll try to take as much as possible. But for now, we'll slip into a break on this edition of Buy Now, Sell Now, but stay tuned, more on the other side. Don't go anywhere.
More, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that